Okay friends, we need to learn about this concept of 10 subsection 2a in the form of some illustrations. So have a look into this. Illustration 1. Ronald Private Limited is engaged in supplying management consultancy services in Rajasthan. In the preceding financial year, it has a turnover of 42 lakhs from the management consultancy service. See, management consultancy service is not there in 10 subsection 1, not at all applicable, because when it is service sector, what will come in 10 subsection 1? Only one service, that is supply of food. Or they are having a main business called as manufacturer or a trader or supply of food, and balance they can render some services up to the specified limit. That is what 10 subsection 1. But here they are neither manufacturer nor trader nor restaurant service provider. So some other service is their main business or core business. Then 10 subsection 1 is not applicable. It is only 10 subsection 2 capital A. As per 10(2)(a), what should be the aggregate turnover during the previous year? It should not exceed 50 lakhs. Then only they can opt for composition scheme under 10(2)(a) during the current year. Please check what is their turnover during the previous year. Here the word given is turnover. So here the assumption is it is an aggregate turnover. Further, it has also earned a bank interest of 12 lakh from the fixed deposits. While calculating aggregate turnover, whether we take interest income, no, it will be excluded. While calculating aggregate turnover, interest income will be excluded. Interest income will be excluded. This we have discussed in explanation 1 to section 10. Aggregate turnover includes supplies from the 1st April to the date they are liable to get registered, and it excludes interest, any consideration represented by way of interest. Therefore, 42 lakhs from management consultant service. Further, it has also earned bank interest, means in that 42, 12 is not there. So 12 we will take, no, 12 we will not count. Therefore, it is only 42 lakhs and it does not exceed 50 lakhs. So they can go for the presumptive taxation, that is in the sense like composition scheme under section 10 subsection 2a. So that you need to write as the answer. Then next, Mr. Ankur of Delhi started profession of architect with effect from 1/4/2019. Architect, again, it is not manufacturer, trader or restaurant service provider, so no doubt 10 subsection 2a. His value of intrastate taxable supplies up to 30th September 2019 was rupees 20 lakhs. He applied for registration on 1st October 2019 and opted for presumptive scheme for service suppliers in registration application and was granted registration as per GST law. I told you, that is, there are two ways in which you can enter into the composition scheme. First, you need to register and then you need to go into the composition scheme. Suppose at the time of registration itself, if you want to enter into the composition scheme, in the registration application we have an option. What is that option? Select composition scheme. So you parallelly get registered and you are into composition scheme. So no need to make an application separately for composition scheme. Whereas in case you already got registered, at that time you don't want to enter into composition scheme, and at a later time you want to enter into the composition scheme. At a later point of time you want to enter into the composition scheme, for which you need to make a intimation that I want to enter into the composition scheme in CMP02. There is one form, CMP02. In that CMP02 you need to make application. So therefore, here what he did, he commenced the business in 1/4/2019. So 2019-20 financial year he commenced the business. And his value of intrastate taxable supplies, because under 10(2)(a) he should not make interstate supplies. So intrastate taxable supplies was 20 lakhs. Means he reached the threshold on 30th September. He reached the threshold limit on 30th September. And he applied for registration on 1st October and opted for presumptive scheme. So along with the application for registration, he also entered into the composition scheme 10(2)(a). He made intrastate supplies of 35 lakhs for the quarter ending 31st December 2019. So after 20 lakhs, what is the turnover that he has made? 35 lakhs. You are required to determine his presumptive tax liability under 10(2)(a) for the period 1/4/2019 to 31/12/2019. This is the point which we have discussed previously. What is that? in case of unregistered person as on 1/4/2019. Up to the threshold limit, GST not payable. Up to the threshold limit, GST not payable. So in this answer, in this question, what is the threshold limit? 20 lakhs, GST not payable. After crossing 20 lakhs, for the additional 50 lakhs, they can go for 3% CGST, 3% SGST under this scheme. And whether this 10(2)A is applicable to this person? Yes, 10(2)A is applicable to this person. Why 10(2)A is applicable to this person? Because previous year he don't have business, means aggregate turnover will be 0. So therefore current year he can go for 10(2)A, and in the current year when he go for 10(2)A, what will happen? So he need to pay GST on the turnover, not on the aggregate turnover. And for the purpose of turnover, explanation 2 to section 10, it is not 10(1) only, it is for all, entire 10. Explanation 2 to section 10 says what? While calculating the turnover, we need to exclude supplies from 1st April of the financial year till the date they are liable to get registered. So therefore this 20 lakhs should be excluded. And what is the remaining amount? 35 lakhs, which means what is the total turnover? It is first 20 lakhs you should not be counting in the turnover itself. So the turnover itself is, turnover in a state or union territory itself is 35 lakhs. So on the 35 lakhs, whether it crossed 50 lakhs? No, it did not cross 50 lakhs. Therefore on the 35 lakhs we need to pay GST at the rate of 6%. So that is the answer. See here. As per section 10(2)A, if registered person is eligible to take benefit of this subsection, he shall pay GST at the rate of 6%. So what we need to do here? On 35 lakhs we need to pay 6%, 2,10,000. And now previously for May 20 attempt, there was a confusion whether we need to take the 20 lakhs, that is total amount on the 20 lakhs, no, and remaining 30 lakhs it will be 6%, on the balance 5 lakhs it will be normal rate. That's how the different interpretation used to be, but now that has been restored by making an explanation in the section 10 itself. So there is no two different views. This is the view you need to follow for November 20 exam. Then next, illustration 3. The following information is noted from the records of X, a technical consultant located in Mumbai, and Y, a software developer in Pune. Technical consultant, purely service sector. Software developer, purely service sector. So 10(2)A is only applicable to them. And they both commenced business. X commenced business in 2017. Right now we are discussing for which financial year. So they did not give anything, date of commencement, which means for the current financial year maybe turnover of the financial year 18-19 is given, and invoice issued after 1st April 2019. Means they commenced business, X commenced business long back, which means already he would have got registered. How you know that he would have got registered? What is the threshold limit for a person to get registration if he is a service provider who is located in Mumbai, Maharashtra? It will be 20 lakhs. Now what is his turnover for the previous year 18-19? 43 lakhs. Means that would have exceeded 20 lakhs. So he would have got registered in 2018-19 itself. Now in 19-20 he is a registered person up to 50 lakhs from April 1st. He will not be, he will be paying GST at the rate of 6%, that is 3% CGST, 3% SGST. Beyond 50 lakhs, he will pay GST at the rate of normal rates, whatever is applicable. Now, assuming that the normal rate is 18%, now look into the case of X. Again, I am repeating this discussion, carefully listen. First, X is, see, I am discussing this independently, or X and Y separately. X is a technical consultant. Where is he located? In Mumbai. X is located in Mumbai. And Maharashtra, what will be the threshold limit? 20 lakhs for service sector. Now, for previous financial year, what is his turnover? 43 lakhs. Means that has crossed the threshold limit? Yes. So, which means in the previous year itself, he would have registered? Yes. He is a registered person as on 1st April 2019. And what was his aggregate turnover during the previous year? 43 lakhs. It does not exceed 50 lakhs. So current year he can opt for this 10(2)(a). And in the current year, as he already got registered, see here, as he already got registered, so for 50 lakhs it will be 6% and thereafter it will be normal rate. Here normal rate data is not given, so we assume the normal rate as 18%. Now for the first 50 lakhs, 3 plus 17, 20, 20 plus 18, 38, 38 plus 12, 38 plus 12, 50. Exactly up to this, we will pay GST at the rate of 6%, and remaining 20 and 56 GST at the rate of 18%. Okay, that is the answer. So see here, so up to 50 lakhs, that is invoice number 4 2019. Up to this invoice number 4 2019 we pay the presumptive 6%, and thereafter last two invoices we pay the regular rate of 18%. Now in case of Y, let's analyze. Y is a software developer located in Pune, Maharashtra. Now what is the threshold limit for a person who is making services in Maharashtra? 20 lakhs. So 20 lakhs, and turnover of the financial year 18-19 is nil. So previous year, because he commenced business only in the current year. So up to 20 lakhs threshold, they are not at all required to pay GST. So therefore, first invoice and second invoice, 3 plus 17, there is no GST. Thereafter, additional 50, additional 30, additional 50. So additional 50, so 18 plus 12 is 30 plus 20. So this is additional 50 on which 6%, on last invoice it will be 18%. So see that. So first 3 and next second invoice 0 liability. Why? Threshold limit. Thereafter next invoices up to 50 lakhs it will be 6%. Last invoice only it will be 18%. So that's the way in which you need to arrive at the answer. So we completed now 10 subsection 1, 10 subsection 2, 10 subsection 2a. Now we are proceeding to other small points in section 10. 10 subsection 3. The option availed by a registered person under subsection 1 or subsection 2a, because now 2a is inserted, as the case may be, shall lapse with effect from the day on which his aggregate turnover, aggregate turnover during a financial year exceeds the limit specified in subsection 1 or subsection 2a, as the case may be. Now listen here. During the current year he has an aggregate turnover. That aggregate turnover, when it crosses 1.5 crores or 50 lakhs as the case may be, even 75 lakhs as the case may be, then they are seized out of the composition scheme and they need to start paying tax under regular scheme or normal scheme. So to understand this, let's take an example. See, previous year, my aggregate turnover is 0, which means I have commenced business only during the current year. So during current year, I commenced business during the current year. Now during the current year I have to see my aggregate turnover. So my aggregate turnover should be up to 150 lakhs, aggregate turnover up to 150 lakhs, this is beyond. Let's take this aggregate turnover as 30 lakhs, ATO 30 lakhs. Now when my aggregate turnover is 150 lakhs, up to that only I can pay tax at the composition scheme. Now in this, say up to 20 lakhs is my threshold limit. 20 lakhs is my threshold limit. So 20 lakhs is my threshold limit, and beyond the 20 lakhs up to this is say 130 lakhs of aggregate turnover is the turnover in a state or union territory. Is the turnover in a state or union territory. Again I am repeating, previous year the aggregate turnover is 0, and current year aggregate turnover up to 150 lakhs he will be in composition scheme. Thereafter he will be under the regular scheme. In that 150 lakhs of aggregate turnover, when you calculate the tax under composition scheme, you should not take the threshold limit. So on this there is no tax. On this there is no tax. Then on this there will be tax at the rate of 1%, assuming that he is a trader. On remaining 30 lakhs, the tax will be at normal rates. The tax will be at normal rates. You understood what I am referring to? That is, sir, threshold limit will not be counted in turnover, but threshold limit will be added to aggregate turnover. Threshold limit will not be counted in turnover, but threshold limit will be added to aggregate turnover. So aggregate turnover only I should see while calculating 150 lakhs. In that the threshold limit, no tax. On remaining amount there will be tax at the rate of composition scheme, because while calculating turnover I should exclude the threshold limit. You understood? Same way when my aggregate turnover during the current year crosses 50 lakhs, I need to pay GST at the normal rates. That's what 10 subsection 3 says. See this, again see. The option availed by a registered person under subsection 1 or subsection 2, as the case may be, shall lapse with effect from the date on which his aggregate turnover during the financial year exceeds the specified limit under subsection 1 or 2A, as the case may be. Which means this will create lot of confusion now to our regular understanding. Listen, what is that we discussed? Up to 50 lakhs, that is additional 50 lakhs. So here our interpretation is based on what? Based on the explanation 2 to section 10, which says while calculating the turnover for payment of GST, under 10 to A or 10 subsection 1, you need to exclude this first supplies from the date when the person is liable to pay, like from the first day of the April till the date he is liable to pay GST, which means that liable to get registered. So that should be excluded. On the remaining amount only GST will be payable at the rate of 6%. So therefore we analyze that when the threshold limit is there, there is no GST, and on the amount beyond the threshold limit, so we need to pay GST at the rate of 6%. But see the twist. Here this additional 50 lakhs interpretation came based on explanation 2, but as per 10 subsection 3, again there is a contradiction in that point. What is that contradiction? See this. Now this I took in the context of 10 subsection 1. 10 subsection 1. 10 subsection 1, again I am repeating, previous year if the aggregate turnover is 0, current year he commenced the business, then we need to take aggregate turnover up to 150 lakhs, because that is the limit given under 10 subsection 1, and beyond 30, like beyond that aggregate turnover 150 lakhs, 30 lakhs, no doubt 30 lakhs tax at the normal rates. In this 150 lakhs, threshold limit is 20 lakhs for which no tax, and beyond the threshold limit up to 150 lakhs we need to pay tax at the rate of 1%. Then same way during the previous year, if the aggregate turnover equals to 0, during the previous year if the aggregate turnover equals to 0, and during the current year when a person commenced business, but this business is not eligible for 10 subsection 1. This business is eligible only for the purpose of 10 subsection 2a. 10 subsection 2a only this business is eligible. Now what is that we need to analyze? That is up to 50 lakhs, aggregate turnover 50 lakhs, aggregate turnover 50 lakhs, and here aggregate turnover beyond 50 lakhs. Say this aggregate turnover is 30 lakhs. Now in this 50 lakhs, again we have the threshold limit. That is 20 lakhs threshold, 20 lakhs threshold limit, and balance 30 lakhs is called as turnover in a state or union territory. Now for this 20 lakhs there is no tax, no doubt in that, no tax, and for this 30 lakhs we have to pay tax at the rate of 6%, no doubt in that. Beyond this 50 lakhs, for the remaining 30 lakhs, no doubt we need to pay tax. At what rate? Tax at normal rates. Why normal rates? Because 10 subsection 3 says, once your aggregate turnover crosses 50 lakhs, you cannot be into the scheme, means you need to come out of the scheme. Then whatever we have analyzed based on explanation 2 is wrong. Whatever we have analyzed based on explanation 2 is wrong, means what is the mistake they have done? They corrected explanation, they corrected that by giving explanation 2 as an amendment, but they forgot to correct 10 subsection 3. Because in 10 subsection 3, what the word they have used? Aggregate turnover. They use the word aggregate turnover. See, you may get a doubt. Why should we believe you, sir? Because I have just reproduced the BRAINERY Act only. It is copy paste of BRAINERY Act. You can refer to 10 subsection 3. They use the word aggregate turnover. That's where the twist starts. Had they used the word turnover, you are right. What is that? Additional 50 lakhs we need to pay GST at the rate of 6%. Sir, you should have told that before na. If I have told that before, there is no suspense element in that, dear. So 10 subsection 3 says clearly what? On which his aggregate turnover during the financial year exceeds the limit specified. So which means, sir, whatever is our understanding, that is here it should be additional turnover. No, that is additional 50 lakhs. No, it is additional up to 50 lakhs. Additional up to 50 lakhs. What does it mean? Additional up to 50 lakhs means on the balance. So threshold limit 40, 20 or 10. See, logically 20 only will come, 20 or 10 only will come, because 40 lakhs is for goods. So that threshold limit and the balance, that is additional up to 50 lakhs. That's how you need to remember. Additional up to 50 lakhs. Because once you cross the 50 lakhs of aggregate turnover, and while calculating aggregate turnover, you will include even this applies from the first day of a financial year till the date that person is liable to get registered. Therefore, on the balance only, we need to pay GST at the rate of 3% and 3%. So now, what is your interpretation for this question? For this question, you see this. So 20 lakhs and 35 lakhs crossed 50 lakhs, 20 lakhs and 35 lakhs. Take illustration number 2, 20 lakhs and 35 lakhs, it crossed 50 lakhs. So first 20 lakhs, no GST. Even though as per explanation 2, turnover shall not include the supplies from first day of April of financial year to the date from which he becomes liable for registration. Supplies made till supplier becomes liable for registration shall not be counted in the turnover for payment of GST. Supplies made after supplier become liable for registration shall only be counted for turnover, and such turnover of value up to 50 lakhs shall be eligible for benefit under presumptive levy 6%. That is correct. Up to this correct. Thus, when supplier has taken GST registration for the first time, the presumptive tax at the rate of 6% shall be payable on the supplies made by him only after the date of registration. Thus, the amount of composite tax liability will be first 20 no tax, next 30. First 20 no tax, next 30 6%. So that is rupees. So 30 lakhs into 6%, 1,80,000. 1,80,000. How that CGST and SGST will be 90,000 and 90,000. 90,000 and 90,000. Thereafter on balance 5 lakhs. Thereafter on balance 5 lakhs. GST is payable at normal rates. GST is payable at normal rates. Why GST is payable at normal rates? Why GST is payable at normal rates? As aggregate turnover exceeds 50 lakhs during current year. 50 lakhs exceeds during current year, and section 10(2)(a) not applicable in terms of section 10(2)(a) not applicable in terms of section 10 subsection 3. In terms of section 10 subsection 3. What does 10 subsection 3 says? 10 subsection 3 says once your aggregate turnover exceeds the limit. Actually that's a mistake here. Explanation 2 they gave correctly, but amendment should have been done in 10 subsection 3 also. They did not do. Because of this only this interpretation will come. Now what should be taken as the view? Come on, I just confused you and now I have rectified it. What is that? Sir, up to threshold no tax. Beyond threshold and up to 50 lakhs, the difference beyond threshold and up to 50 lakhs or beyond threshold and up to 1.5 crores, we need to pay tax at the composite rate. Once you cross that 150 lakhs or 50 lakhs or 75 lakhs as the case may be, you will be coming out of the normal, you will be coming out of the composition scheme and you will go into normal scheme, because the word used in 10 subsection 3 is what? Aggregate turnover, and aggregate turnover includes the threshold limit also. So that's the explanation for 10 subsection 3. A person availing composition scheme FAQ 15 under section 10(1) or 10(2)(a) during a financial year crosses the turnover of 1.5 crores or 50 lakhs respectively in the mid of the current year, somewhere during the current year. Will he be allowed to pay tax under composition scheme for remainder of the year till 31st March? No. The option availed shall lapse from the date on which his aggregate turnover during the financial year exceeds 1.5 crores or 50 lakhs. Then section 10 subsection 4. A taxable person to whom the provisions of subsection 1 or as the case may be subsection 2(a) apply shall not collect any tax from the recipient on supplies made by him, nor he shall be entitled to any input tax credit. I told you in the first time when I started discussion this composition scheme, there are two disadvantages in composition scheme. Number one, whatever we purchase on which if we have paid GST, we cannot take ITC, which means from whom we should purchase? We should also purchase from a person who is opting for composition scheme. But practically that is difficult because we cannot identify our supplier always whether he is into composition scheme or not. But if we can, then that will be a factor for deciding, because when you buy from a person who is not opting for composition scheme, then the GST will become a cost to you. Whereas if you buy from a person who is opting for composition scheme, there is no GST. So that decision is some crucial decision. Thereafter, can you collect GST from your customer? No, you cannot collect GST from your customer. Say for example, by mistake you collected. You are not supposed to collect composite tax from your customer. By mistake you have collected. Can he take it as ITC? No, it is a blocked credit. He cannot take it as ITC. First of all, you are not supposed to collect. But having you collected, he paid, and can he take it as ITC? No, it's a blocked credit. Then 10 subsection 5. So 10 subsection 1 normal composition scheme, subsection 2 restrictions or conditions, 10 subsection 2a special composition scheme for service providers, 10 subsection 3 once you cross aggregate turnover beyond the specified limit during the current year you are disqualified from the composition scheme, and 10 subsection 4 you cannot take ITC on inward supply and you cannot collect GST. 10 subsection 5 if the proper officer has reasons to believe that a taxable person has paid tax under subsection 1 or 2a as the case may be, despite not being eligible, how it will be? See, in this case, what is that you would have thought? You would have thought you are eligible for composition scheme for 50 lakhs. So instead of this 30 lakhs and 6%, here in this 30 lakhs on 20 lakhs, on 20 lakhs also you paid tax at the rate of 6%. You paid tax at the rate of 6%. Of course, this is wrong, but you did that. On 20 lakhs, you paid tax at 6% because you are thinking that for 50 lakhs I need to pay tax at the rate of 6%, and then even though you have done that, that's not correct, and believe that a taxable person has paid tax under this subsection 1 or subsection 2 as a case may be despite not being eligible, such person shall, in addition to any tax that may be payable by him under any other provisions of the Act, be liable to pay a penalty, and the provisions of 73 or 74 shall mutatis and mutandis apply. What is 73 and 74? Recovery procedure by issuing a show cause notice. So what government is going to do? Here already you paid for the 20 lakh 6%, and if the normal rate is 18%, then the extra 12% will be recovered from you by issuing a notice along with interest and penalty. Can a person paying tax under composition scheme withdraw voluntarily from the scheme? If so, how? See, all this information is based on the rules here, based on the rules. See, whenever a person wanted to withdraw from the composition scheme, why a person will be requiring to withdraw from the composition scheme? Any logic in that? Yes. What is the reason why I am going into composition scheme? Because I am thinking that I can increase my volume. When I can increase my volume and I will be getting more profit, total profit, even though my profit per unit or per sale is less, that's the reason why I will be going into composition scheme. And that became a flop. That is, I am not able to increase the volume beyond a number, and that volume increase because of reduction in the price by not charging GST is not something great for me, and my profit comes down. Had I been into normal scheme itself where my profit is going up, then why will I be into composition scheme? I will come out of the composition scheme, and like any other dealer I will also charge GST to my customer. Now I wanted to come out, or I breach the conditions. I know that I breach the conditions. I should not be making interstate supply, but that interstate supply is so tempting that I need to accept the offer, which means I need to come out of the composition scheme, or I need to make supplies through e-commerce operator. Some good deal I got through Flipkart or Amazon and I want to do that, but I cannot make that because I am into the composition scheme. So whenever I breach the condition, I can come out of the composition scheme and go into normal scheme. So that is known as voluntarily withdrawal, and for that I need to file CMP 04, form number, remember. So for application into composition scheme, CMP 02. For going or entering into composition scheme, it is CMP 02. For coming out of the composition scheme, it is CMP 04. 02 for entering into the composition scheme. Coming out of the composition scheme is 04. And once I file that 04, what will happen? We discussed one point in input tax credit. What is that? Whenever I am coming out of the composition scheme and going into normal scheme, as per section 18, subsection 1, clause C, I can avail the ITC on closing stock before the date when I am migrating from composition scheme to normal scheme. Because when I was under composition scheme, I would not have taken ITC on my inward supply including the capital goods. But now when I am entering into normal scheme, this stock, closing stock, will be used for making outward supply under normal scheme, on which I will pay GST. Therefore, on that closing stock I can take ITC. This we discussed in 18(1)(c), and for which I need to file a form to take the credit, that is form GST ITC 01 within 30 days from the date when I am coming out of the composition scheme and going into normal scheme. That data also I have just interlinked here, which comes in input tax credit chapter. What is the validity of composition scheme? There is no such thing called as validity. Till the time you are not breaching the conditions, you are valid to continue, and every year you don't have to give any intimation here. Once you give the intimation, unless you withdraw or officer has passed an order to cancel, you will be into the composition scheme. The option to pay tax under composition levy would remain valid so long as the conditions of composition scheme are complied with. The registered person paying tax under section 10 may not file a fresh intimation every year. No need to file a fresh intimation every year. What action can be taken by a proper officer for contravention of any provisions of the composition levy and how? What they will do? First, you breach the conditions. And the department came to know about that you breached the condition. They will give a notice, and that notice is in CMP 05. That notice is in CMP 05. Once that notice is given, within 15 days, you need to give a reply to that notice in CMP 06. And your reply, based on your reply, the officer will pass an order in CMP 01 within 30 days. Within 15 days you need to give reply. Notice is received. From notice, within 15 days of receipt of such notice, you need to give a reply, and within 30 days of the receipt of such reply, they will be passing an order, either allowing you to continue in the composition scheme or rejecting the composition scheme to you. So that's what I have just summarized it below. Validity of composition levy. All conditions satisfied, option remain valid. Conditions not satisfied, pay tax as a normal taxpayer, issue taxable invoice for tax supply, and within 7 days file GST CMP 4 as intimation, or self you have to withdraw, not because of breach of conditions. Whenever you want to withdraw, you file an application, and proper officer has reasons to believe that you have breached the condition. Notice, and within 15 days reply, and within 30 days order, either accepting reply or denying the composition levy. Now, there is one important FAQ here. This composition levy has been withdrawn, like it is not that you have voluntarily withdrawn, but the officer passed an order to cancel the composition levy. Whether this date of cancellation is prospective or retrospective. To understand this, I am just giving you an example. Have a look into this example. There is one person who has opted for composition scheme. From 1st April he commenced the business and he opted for composition scheme, 1st April 2019. Then on 18th September 2019 he made supplies through e-commerce operator. That's a breach of condition. But even though he breached the condition, he continued into the composition scheme up to 31st March 2020, end of the financial year 1920, he paid tax under composition scheme. Now, in 2020, 15th May, department has got this information, so they gave a notice. How they will get to know this information? Whenever you make supplies through e-commerce operator will give the details of the suppliers who made supply through e-commerce operator, and that particular registration is under composition scheme. So department has easily got the information, and they will be initiating to issue show cause notice. On 15th May 2020 you got a show cause notice, and you gave a reply to that show cause notice stating that I don't know this provision, extremely sorry, please forgive me, etc. and all, and they did not satisfy with the reply and they have denied the composition scheme to you, and they passed an order on 29th June by issuing CMP 07. Now from which date they can cancel the composition scheme to you? Either prospective, from that date when they passed the order, or it can be retrospective, but it cannot be before the date you have breached the condition. When you breach the condition, on 18 September you breach the condition, before 18 September they cannot cancel the composition scheme. Means up to 18 September 2019 you have fulfilled the conditions, so you will continue to pay tax under composition scheme. Whatever you have paid is correct. Now after 18 September till 31st March, you pay tax under composition scheme, but you should have paid tax under normal scheme. So that order they can pass to cancel the composition scheme from 18 September 2019. For that period already you paid some tax under composition scheme, so the differential tax they can issue show cause notice and they can recover it from you. So that show cause notice for recovery will be under 73 or 74. So that is this illustration. Therefore, this is clarified through a circular. In case of denial of option to pay tax under composition levy by the tax authorities, the effective date of such denial shall be from a date including any retrospective date as may be determined by the tax authorities. However, such effective date shall not be prior to the date of contravention of the provisions of CGST Act or SGST Act or rules as the case may be. So, not prior to the date of, shall not be prior to the date of contravention, shall not be prior to the date of contravention. So, this example will give you the clarity. Then next, what are the entry routes for composition scheme? Already we discussed. What are the procedural compliance to be followed by a person opting for composition scheme? First, to opt into the composition scheme, they need to file a intimation, and that intimation is in form GST CMP 02. And when they need to file that intimation? Before commencement of the financial year. Sir, which means somewhere during the financial year, can I enter into the composition scheme? No, if you are a registered person. If you are obtaining registration, then any time in a financial year, you can obtain registration and you can enter into composition scheme. That is, already you are a registered person. When you can opt for composition scheme? Beginning of the financial year. Not registered person. During the year, I am applying for registration. Any time you can enter into composition scheme. Suppose, and at that time there is no need of intimation, because the registration application when you tick for composition scheme, that itself is the application. Whereas if you are already registered person and now if you want to enter into composition scheme, you will be filing CMP 02, and that CMP 02 should be filed before commencement of the financial year. Then only from the beginning of the financial year you can go into the composition scheme. Then furnish a statement in ITC 03. What is this? That is, previous year you were under normal scheme, now you are going into composition scheme. During normal scheme, you would have taken ITC on the inward supplies, and now you are into composition scheme, you cannot enjoy that ITC. So, whatever ITC on the closing stock as on the date you are going into the composition scheme, you have to reverse. In case of 18 subsection 1C, you will avail, because you are entering into normal scheme from composition scheme. Now you are going into composition scheme from normal scheme. 18 subsection 4 comes. Section 18 subsection 4 says that so much of the ITC availed on closing stock needs to be reversed, and balance ITC if any will be lapsed, and if there is any shortfall of the ITC balance you need to pay. This with illustrations we discussed in input tax credit chapter. So that will be applicable here, and for which you need to, for reversal of ITC you need to file ITC 03. For availment of ITC, ITC 01. For reversal of ITC, ITC 03. For the purpose of adding ITC with respect to closing stock to output tax liability in terms of 18 subsection 4 within 60 days from the commencement of the relevant financial year. Within 60 days from the commencement of the relevant financial year, you need to file this. File form GST CMP 08 providing the details of inward and outward supplies by 18th of the month following every quarter. What is this CMP 08? CMP 08 is the return year, quarterly return, whether it is a monthly return or a quarterly return. Quarterly return, which means under composition scheme whether I need to pay GST on a monthly basis or quarterly basis. Quarterly basis I need to pay GST, and that GST which I am paying on a quarterly basis I have to pay along with a statement. That statement is GST CMP 08, and that should be filed by 18th of the month following every quarter, and that is the time I have to pay the composite tax also. Then I have to file one annual return. When I am under composition scheme, I need to file one annual return. That annual return should be filed in GSTR4 by 30th April of the succeeding financial year. For example, in financial year 1920, if I am into composition scheme, then by 30th April 2020, I have to file this annual return in GSTR4. Previously, GSTR4 was a quarterly return. Now they have made it annual return, and in the place of quarterly return, they added CMP08. Now, look into that form and manner of submission of statement and return. That is, say during a financial year 1920, a person commences the business, and up to 20 lakhs there is no GST, and after that he will be called as a composite taxpayer, and he will be filing CMP8 and pay GST by 18th of the month following every quarter and annual return. Now March over. For next financial year, he has to decide either to continue into composition scheme or he need to switch over to normal scheme. If he continues, same compliance. If he switches over, then he need to file GSTR1 and GSTR3B and annual return GSTR9. That will continue from the April. So whenever he want to come out of the composition scheme, then from there onwards he need to follow the regular return filing mechanism. Then, can a person opting for composition scheme make interstate purchases? See, the condition is that they should not make interstate supply of goods for 10 subsection 1, interstate supply of goods or services for 10 subsection 2a. Nowhere we have a condition that they should not make interstate purchases. They can make interstate purchases. Then, whether the provisions of time of supply is applicable for a person opting for composition scheme. That is, it means that whether GST is payable on advances for a person who is opting for composition scheme. Generally here, in case of advances, time of supply we discussed there. If I am a supplier of goods, on advances there is no GST because the time of supply is invoice date or that is due date of invoice or actual date of invoice, whichever is earlier. That is because of one notification number 66/2017. That notification 66/2017 says that with respect to supply of goods, the time of supply will be determined only in terms of section 12, subsection 2, clause A only. Clause B not applicable. What is clause B? Date of payment is not applicable. Therefore, it is the date when invoice is to be issued in terms of section 31 or the date of invoice, whichever is earlier. Due date of invoice or actual date of invoice, whichever is earlier. But while drafting this notification 66/2017, they clearly specified that it is not applicable for a person opting for composition scheme other than those opting for composition scheme, like that it is given. Other than those opting for composition scheme, like that it is given, which means that this notification is not applicable for a person who is opting for composition scheme. Then naturally the time of supply concept to be applicable. And even for section 10 subsection 1 and 2a, how it starts? Notwithstanding anything contrary to the provisions of this act, which means if there is any contrary provisions, then only it will not be applicable. But about time of supply, nowhere it is given in section 10. Then how to interpret this? Now let's see the return mechanism. As per return mechanism, if you see, that is CMP08, in that we have an extract, table 3, summary of self-assessed liability. There we need to report how much GST we need to pay for that quarter, and in that, what is the explanation given below that heading? Net of advances, which means advances don't consider. Net of advances, take out the advances, and the balance only you need to report, which means that on advances GST not payable, even though it is not given in section 10, but it is given in the rules which enables this form CMP08. Therefore, whether the provisions of time of supply, regular provisions of time of supply applicable in case of composition scheme? No. Therefore, on advances, GST is not payable in case of goods or services supplied under composition scheme. So, this is the issue here. So, that's what I have given. First I said, a notification not applicable to composition scheme. Then naturally the time of supply should be applicable. But we have this statement, it says net of advances. So, definitely this will only prevail, and as per that, we don't have to pay GST on advances. Then next. FAQ 26. Can a customer who buys from registered person who is under composition scheme claim composite tax as input tax credit? Already we discussed, no, because it is a blocked credit. Then what are the other conditions and restrictions subject to which a person is allowed to avail composition scheme? Other conditions, that they should mention in every document or notice etc. that they are composite tax person. Even in the signboard or display board, wherever it is, they need to clearly mention that they are opting for composition scheme. So they need to mention the words composite taxable person or composition taxable person. Then these are the forms involved. See, the CMP1 and CMP3 is not applicable nowhere. CMP1 and CMP3 is applicable only for one-time transition. At the time when we were under old scheme of indirect taxes to GST, for that only this was applicable, but I just gave that, so that is not applicable now, but the other forms are applicable. CMP2 is for entering into composition scheme. When you enter into composition scheme, automatically you need to reverse. So ITC 3 I have linked. Same way CMP4, intimation for withdrawal from the scheme, then ITC 1 we can take the ITC. Then CMP5 notice, CMP6 reply to the notice, CMP7 is issue of order, CMP8 is quarterly return. With this we completed composition scheme, and we have some case studies on the composition scheme. Have a look into that. First, case study number 1. Explain the following in accordance with the provisions of GST Act pertaining to composition scheme under section 10 subsection 1 and 10 subsection 2A. Can a registered person who purchases goods from a taxable person paying tax under the composition scheme avail credit of tax so paid on purchases made from a composition dealer? What is the question here? There is a registered person who purchases goods from a taxable person paying tax under composition scheme. So I am a person not opting for composition scheme. I purchased goods from a person who is opting for composition scheme and I paid some tax. Can the tax so paid on purchases made from a composition dealer be taken as credit? No, that is not possible. I told you it's a blocked credit, you cannot avail. Can a person paying tax under composition scheme issue a tax invoice under GST? No, tax invoice cannot be issued because you cannot recover the GST from the customer. Then what is the document that you need to give? Bill of supply. We discussed it in invoice and time of supply chapter. Are monthly returns required to be filed by a person opting for paying tax under composition scheme? No, they need to file a quarterly return in CMP 08. Can a person who has opted to pay tax under composition scheme avail input tax credit on his inward supplies? On their inward supplies, can they take ITC? No, a person who is opting for composition scheme, that's what we discussed na, in 10 subsection 4, that they cannot take ITC on their inward supplies. Case study 2. In accordance with the provisions of CGST Act, give answers to the following pertaining to composition scheme under section 10 and 10(2)(a). See, whatever we discussed here, is it same for 10 as well, 10 subsection 1 as well, 10 subsection 2A? Yes, both are same, no change in that. Now this another question. Whether a composition scheme will be optional or compulsory? Optional. May opt to, that is the word used, which means it is optional. A taxable person having same permanent account number can opt to pay tax under composition scheme by seeking separate registration for branches. Impossible here, because they cannot go for separate registration for the purpose of composition scheme. Each and every registration under the same permanent account number should opt for composition scheme or should come out of the composition scheme and go into normal scheme. If they want to do so, they have to start the business with a different permanent account number. That's a loophole. But with the same permanent account number, if they want to start the business, definitely it is not possible to have one registration composition scheme, another registration normal scheme. Even perhaps for these two registrations under the same subsection, the composition scheme should be. That also we discussed. A taxable person having same permanent account number can opt to pay tax under composition scheme by seeking separate registration for branches. What is your answer? No. Can composition scheme be availed if a taxable person affects interstate supplies? No. For 10 subsection 1, they should not make interstate supply of goods. For 10 subsection 2a, they should not make interstate supply of goods or services. Then case study 3. Yes friends, look into case study number 3. XYZ Limited is a manufacturing company located in Bangalore. During the financial year 18-19, total value of supplies including inward supplies taxed under reverse charge basis are 1 crore 54 lakhs. So this is the total value of supplies for which financial year? 2018-19. The breakup of the supplies is as follows. Intrastate supply of goods chargeable to nil rate of GST is 45 lakhs. Whereas intrastate supplies made under forward charge is 75 lakhs. Now we need to determine what is it, computation of composite tax or is it eligibility to opt for composition scheme. Look into the last. Explain whether XYZ Limited is eligible to opt for composition scheme for the current financial year 2019-20. For the current financial year 2019-20, are they eligible to opt for composition scheme or not is the question, for which we need to take the aggregate turnover. While taking aggregate turnover, we need to take taxable supply, non-taxable supply, everything, and we need to exclude inward supply under RCM. So what is the inward supply under RCM? 5 lakhs, that will not come, and interest income also will not come while calculating aggregate turnover. So inward supplies will not come, interest income will not come, even tax GST is not given, so that will not come. Now what is the balance? 45 lakhs plus 75 lakhs plus 9 lakhs, so that comes to 1 crore 29 lakhs. So therefore 1 crore 29 lakhs does not exceed 150 lakhs, therefore they can opt for composition scheme during the current year 10 subsection 1. But 10 subsection 2a not possible, because for 10 subsection 2a the aggregate turnover during the previous year should not exceed 50 lakhs. So therefore that I have given as a note. Section 10 2a is not applicable as the aggregate turnover during previous year does not exceeds 50 lakhs. Then next, case study 4. A dealer X has 2 offices in Delhi. How to determine whether X is eligible to avail benefit of the composition scheme, as turnover of both the offices for the financial year is 66 lakhs and 42 lakhs respectively. As per section 10 subsection 1 of CGST Act, a registered person whose aggregate turnover in the preceding financial year does not exceed 1.5 crores can opt for composition scheme. Now, when you take aggregate turnover, you need to calculate the turnover of all the branches. So therefore, 66 we should take and 42 also we should take. Put together 66 and 42, that comes to more than 150 or less than 150. It is less than 150, 108 lakhs. So it does not exceed 150 lakhs. Therefore, they can opt for composition scheme under 10 subsection 1. But 10 2a is not applicable because the aggregate turnover exceeds 50 lakhs. And remember, when you calculate aggregate turnover, you need to calculate on a all India basis. So multiple registrations, entire turnover should be taken. Then ABC Industries, a manufacturer in Mumbai, is engaged in supply of goods in Mumbai as well as Chennai. Determine whether the ABC Industries is eligible for composition scheme. So he is a manufacturer in Mumbai, engaged in supply of goods in Mumbai as well as Chennai. That is interstate supply they are making. They cannot opt for composition scheme, let it be 10 subsection 1 or 2a. Then case study 6. A Limited, a manufacturing concern in Rajasthan, has opted for composition scheme under section 10 subsection 1 during financial year 2019-20. It requires you to determine its composition tax liability and total tax liability. In financial year 19-20, total value of supplies are 105 lakh 40,000. The breakup of supplies are as follows. Intrastate supply of goods X chargeable at 5% GST. See, what is it they are telling? It requires you to determine the composition tax liability. Then previous year, what was the aggregate turnover? It is 105 lakh financial year 2019-20. So we don't have the previous year information. So this is current year information, means previous year they would not have crossed 150 lakhs is the assumption. That's where they are telling has opted for composition scheme during the current year. Now Current year, we need to compute the liability. For computing the liability, we need to take turnover, and this is a manufacturing concern. So we need to take turnover or taxable turnover. Turnover we need to take and multiply with 1%. While calculating the turnover, we should exclude the supplies from the first day of the financial year till the date they are liable to get registered, but that is not applicable here. Then interest income will be excluded. Whether we have interest income, yes, so don't take this in turnover. Even inward supplies will not come in the turnover, but we need to pay GST on that separately. So this 30 lakhs, 18 lakhs, then this 2,40,000 and 30 lakhs. So that comes to 80,40,000. On that 80,40,000, we will multiply 1%, 80,400, plus with respect to this inward supply, that is 5 lakhs, we need to pay GST and RCM at the normal rate. So 5 lakhs into normal rate is 5%, that is 25,000. So 1,05,400. This is how the liability will be determined. But also check the aggregate turnover. While calculating aggregate turnover also, it will remain the same, no change in that. But when aggregate turnover will have a different meaning when we have supplies from the first day of the financial year till the date they are liable to get registered. That should be added to the aggregate turnover. Why that makes sense? Because if you add that and if it goes beyond 150 lakhs, whatever turnover it goes beyond 150 lakhs, they need to pay GST under normal scheme. Due to that reason, here it does not go beyond 150 lakhs. Therefore, this will be the way in which liability will be determined. Now, there is another part to this question. What will be your answer in the above case if A Limited is a trader? Trader will pay GST only on the taxable turnover. So therefore, here nil rate GST will not come in taxable turnover, and then wholly exempt also will not come in taxable turnover. The taxable turnover will be this 30 lakhs and this 30 lakhs. So 60 lakhs into 1%, and then on inward supplies 5 lakhs into 5%, 25,000. So 85,000 will be the tax liability. This if he is a trader. But aggregate turnover, be careful here, that you should remember. Then there is one amendment, waiver from filing GSTR1 for 1920 for specified taxpayer. What is that? That is, those who could not opt for option of special composition scheme, they have to file CMP 02 and they need to intimate and have furnished a return in GSTR 3B instead of CMP 08. Actually, a person who is opting for composition scheme should file return in GST CMP 08, but they file GSTR 3B without knowing it. Because they file GSTR 3B, it means that they should also file GSTR 1, no, not required, and that waiver is given here. That's a small amendment related to this. So with this, we have completed composition scheme, and we have one big illustration. So that big illustration is as per the past exam questions. So that will be the additional discussion. But otherwise, from the concept point of view, this is about composition scheme.